Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, November 7th, 2024. S&P 500 currently sitting at 6635. I'm David Zarling. I'm here with Ian McMillan. A little bit of selling this week.
Yeah, certainly selling. Would you say we're at 66.35?
66.35 on the S&P. I can use a different index if you'd like.
No. Yeah, we're below 50-day moving average, upward slipping 50-day moving average. Lost the October highs around 67.70. Lost the rate of trend from the August lows. It's tough look. It's a tough intermediate term look.
Yeah, I mean, uptrend, broad uptrend still intact.
Yeah.
But a 4% correction never feels good. But you always have plenty of those during the year. I mean, on average, S&P 500 return annually is around 8 or 9%, but you typically get a drawdown on average about minus 14. And then you should be like, well, Dave, we had one in March and April. Why do we have to do this again? But it doesn't have to be a minus 20. It could just be a minus 5, minus 7, perfectly normal. And it goes back to what we've talked about the past 3 or 4 weeks. Breadth has been weak. This resolves in one of two ways. Either we get broadening out and breadth catches up to the generals on the field, or the generals walk off the field and we have the large cap, big cap tech catching down to weak breadth. And that's what we've got.
Yeah.
Right. You look at something like Nvidia down 10% on the week, Broadcom down 8% on the week. Although I will say Apple holding up is a nice
Apple's held up well.
And I think whenever you have corrective markets like this, it's about looking for that. Where is the strength? So we underneath the surface, a lot of weakness going into
Google's
this.
Held up well.
Yeah, Google held up well. Apple's held up well. Healthcare, financials. I would say even some international has held up okay.
Yeah.
So while these short-term to intermediate-term corrections don't feel good, and as a trend follower, you're going to be invested going into them, right? There's no such thing as being able to predict and not participate in counter trend moves, which is what this would currently be. Minus 4% after pretty normal market behavior, considering the market had rallied, almost since the April lows.
Yeah.
That's pretty normal.
That's a good point.
What else
VIX back above 22. This would be the highest weekly close since May.
Yeah. And so that means we can expect daily moves greater than 1% up or down. And I think it'll be telling to see if investors get aggressively hedged against this or if they don't. I know earlier, just a couple of weeks ago in early October, we did see a jump in the put call. It'll be interesting to see if we see that same thing. And it's pretty normal. You mentioned the 50-day moving average. We've got the point of control on the S&P 500 near 6650. These important lows near 6550. And then you've got 6400, some important price levels there. So just acknowledging where are we looking for, because all this is price discovery, right? Price moves down to see when sellers are willing to stop selling and when buyers are willing to buy more. We're going to find out where that is.
Well, I can tell you, for me personally, I'm over the discovery. We don't need the price discovery anymore. We found it. We found it.
You like it when we go in straight lines?
Yeah.
That's fair. See, I view this as, okay, did we have euphoria before? Like, was that it? Was that the market top?
I don't know. I mean, I would say no, definitely not euphoria.
I mean, you had how many publications over the past 2 weeks talking about how, Goldman Sachs thinks there's a major correction coming. Jamie Dimon thinks there's a correction coming.
Yeah.
you're typically not seeing that type of narrative. Now, on the flip side, people piling into options and leveraged products, there probably is some unwind to happen. And wouldn't it be poetic if Nancy Pelosi's retirement marked the top of the market? The best investor the world has ever seen.
We'd have to get her to run again.
Right.
Convince her.
She came into politics in 1987 with $165,000 net worth, and her net worth right now is $280 million. She is really good at investing.
She is.
Or she trades on inside information that nobody else in the world gets to use. And maybe we should have a rule for that for politicians. Just maybe.
Yeah, she's certainly
amazing trades.
The kind of the face of the congressional insider trading frustrations that a lot of Americans have. Maybe she's gonna start a newsletter.
She's going sell side.
Yeah,
gonna have some research to sell you
for the love of the game.
Yeah, something. But I find that fascinating. But I digress. We have big cap catching down the wheat breath. We've highlighted the important levels on the S&P 500, 6750, which we're below, 6550, 6400. And then you have the 200 days sitting around 6130. Dare I say something like that? Let's not
do that.
We have Russell 2000 below 2400. You kind of wanted to see this work through those highs, those prior highs. And we'll see. Maybe this week is just a check down to those prior highs and we move higher. We have to wait for further data to come in. But I think another kind of telling thing is when you have these quote unquote really great earnings reports, but the price reactions to them are not.
Yeah, I was gonna ask you, or at least bring up the fact that we are in earnings season. Yes, I've seen a lot of reactions. I'd say most of them seem to be down. I haven't caught many big important stocks with upward. I guess Amazon did. But yeah, a lot of big red candles on earnings reports. And like you said, these would be considered good earnings reports.
Right.
By the people that do their little math and numbers and kind of estimate what earnings per share would be. So I don't know, is that a late cycle thing? Have we entered the stage of you got to be perfect, right? There's such a different vibe between like earnings reports and, a year like this year where you're coming off the lows, right? So, I mean, you can use anything as bullet when there's a market tailwind. And yeah, do you see that on the flip side when you get to this end of the rally?
Well, I have no idea. All I know is that, people get really focused on earnings reports and the market is not working on pricing in that report. It's about the future. So when you have a company have like earnings that are 300% greater than they're supposed to be, but they're down on the week, many investors, they'd be flummoxed by that. Like, how is it possible that a stock that has an earnings surprise of 300% can be down? Well, maybe it's because the big boys realize it's really unsustainable for that type of earnings growth to carry on for the next 12 months, right? The market's always pricing in 6 to 18 months in the future. And so sometimes you get these earnings extremes. It can't, that trend can't possibly continue in the eyes of the people making those investment decisions. So I don't think it's the same thing on the flip side. How could earnings get possibly any worse? The stock is up. So I don't know. I don't know if that, is a harbinger of things to come. Is that, we had a bunch of positive earnings releases, but negative price reaction, because it's not the earnings themselves, it's the price reaction you want to pay attention to. And is that a shot across the bow? I don't know, because I guess I'd be looking for a little more confirmation out of things like equal weight discretionary versus equal weight staples, which is still consolidating. I wouldn't expect financials to be up in a tape like this week. or some of the international strength, or something like Las Vegas Sands to be up.
The
Right?
equal weight S&P is basically flat today.
Yeah. So it is this more large cap catching down to the weak breath, and the weeks to come a resetting a breath that carries us higher. I think that's a likelier outcome based on things like where we have seen some strength, whether it's financials, healthcare, specifically biotech, which is risk on, some of the international things. Now, if big tech continues to crumble, well, that'll be a problem because it's the largest players on the field. It'd be really hard to carry that. Time will tell.
Yeah.
I mean, of the big names, Apple, Amazon, Broadcom, Google, Meta, Microsoft, Nvidia, Tesla, Microsoft and Meta are already through their to the downside through their 50-day moving averages. I do wonder if the others will follow.
Yeah, Microsoft is a really rough look. I know we were joking 2 weeks ago about the double top, but
Yeah, it's not a great look.
it's not. Don't care for that. Netflix below its 200-day, and has been for a couple weeks now. You said Meta's below its 200-day. Yeah, look, I mean,
Yep.
That's even worse. That had a bad earnings reaction and has continued south pretty much every day since then.
And here we have energy positive on the week. Is this just going to be rotation into some of these other hard hit areas? I mean, we are in an environment where only 30% of the New York Stock Exchange is greater than 50-day moving average. So the carnage underneath the surface until this week broadly has been there. Like it's already, there's only 30% of the NYSE above a 50-day moving average. And that's a pretty low number heading into this. And so is this a reset as we head into these next 6 months? Or are we going to have a weak November and December, which really makes the idea of what's going to happen in 2026 very interesting? And you have to be open to both. But first, you got to break some of those levels that we talked about before. Any other area?
I would say just momentum in general continues to be a tough spot. Maybe I should say that on this podcast, but it is what it is. Momentum, just like anything else, periods of over and under performance. You see that in a lot of, even the S&P momentum type funds, right? So then you wonder, okay, right, that's growth, that's mega caps, that's these other things that have been hot for 4 or 5 years. We saw that back in February a little bit, but then certainly have recovered.
Well, what we know is momentum is the most prevalent factor, but that doesn't mean it's a factor that moves in a straight line. It ebbs and flows.
Well, yeah, I think that's a great way to put it.
It does provide outsized returns, like it's an alpha generating factor, but you have to live with the beta that's the result of that momentum. I mean, this is not a mystery. It's just, do you have a process for identifying trend? And right now, momentum's still in a trend. It's just in a counter trend, short-term move.
Well, and so if we are having a shift in momentum, how quickly does that come to the surface too? And a lot of like an MTUM, where they're only going to rebalance or reconcentrate every 6 months.
Yeah,
right. So if there is a shift happening, is an MTUM a great barometer of that?
Yeah. You're just saying because the rebalance and reconstitution happens so infrequently.
Would you be able to tell where the new areas of momentum are? I will tell you one chart that fascinates me is XTN. I think it's more of the equal weight transports. Sideways, very sideways in like a 10% range.
Yeah, very tight.
Since early July, right on top of the 200-day moving average. It's also, right, pretty flat. And I guess would not be a surprise if it's been in an 8% range for 4 months. I will be very curious to see where that one goes. It feels like it's set up for success. if I'm a trend follower. Of course, I can be wrong.
When I think I would see even more so, right? You're cap weighted, same consolidation,
Yeah.
chewing through prior highs. And I think you bring up a good point. Like, this could be the bellwether to study. Like, it's great to see financials hold up in this environment. It's even great to see staples hold up in this environment. Will transports break higher out of this consolidation? And if not, that would be kind of a clue that maybe we are in the ninth inning of this bull market if we can't pull this off.
Yeah. Can't be semiconductors for forever. I mean, I guess it can. Could keep doing that. Not the healthiest approach, but we can do that.
So
I don't know. Maybe we'll get a little new flavor for 2026.
Oh yeah,
I
like
thought we were going to
rotation.
get that this year with foreign stocks.
Yeah.
I mean, some of them have panned out, nicer than others, held up better. What do you think Japan's deal is?
Japan on a yen basis looks great. I mean, I guess it's down this week.
It's had a lot of good last few months.
But I mean, your same leaders are still there. Spain, Poland, obviously Africa and Peru pulled back in with gold miners. What do you think of gold miners and gold?
Well, we might get the dollar. I mean, I think the dollar's at an interesting spot. Dollar index came up to the underside of 100, and that was like 3-4 days ago. So, and the 200-day moving average, which is rolling over. So you could get that tailwind again. Gold miners, yeah, I think they are intriguing again on a relative basis. If I use TDX, I mean, came back to $67 on an absolute basis, which was the highs from September 2011.
Okay.
So it feels good. I mean, I feel like gold miners, you do kind of get some of the equity risk there, right? Because there are days when if they want to sell stocks, they will sell gold miners. Then it doesn't matter what gold's doing.
Right.
Not just days, but weeks or periods like that. But yeah, if I think that they are, gosh, I say setting up again. I mean, I act like they went through a 20% drawdown or something. They definitely got hit. But to shorten my already long-winded answer, yeah, I think they're coming back to, on both an absolute and relative basis, I think they're coming back to interesting spots. I thought maybe we had seen some gold euphoria. So, I mean, I thought the correction would maybe last a little longer. Not saying it couldn't keep going, but from a risk reward standpoint, it would make sense to own gold miners, whether you still own gold miners or if you haven't owned gold miners yet. We seem to be in a pretty big gold environment. Yeah, maybe it could be. Maybe we're not done. I thought we might be done for a little bit, but
yeah, I think it holding up well here. If we're using GDX, around $68 I could see that holding and moving higher, especially when you just talked about. I think the trade weighted dollar thing is kind of a big deal this week, getting rejected at a falling 200-day and an area of polarity. Does that provide a tailwind for stocks? I don't know. It didn't this week, right? It pulled back and stocks went with it.
Yeah. And Bitcoin
trying to hold 100. I think
that's definitely a weird one. I mean, that thing that's a tough weekly chart. If you're going to be below 107,000, 108,000, I think that's a really tough chart. I know clearly. I mean, 100 is an important level. I think it's a big psychological level, especially for that community. I think 100 is a big deal. So it is getting to bounce there today. Dollars, yeah, we'll see. Now, with that said, a failed breakdown and a move back up above 108 and a 200-day moving average.
Be very bullish.
Yeah, would certainly be something that That would make me perk up. A failed breakdown in what is, right, grand context of this. We're still coming off the 2022 lows, $16,000. Bitcoin was $16,000. That seems wild. I can't believe it got that low.
Well, and I think Ripple falls in the same category.
Yeah.
Meaning this level near $2.10, kind of big. Ethereum, same deal. Kind of an important level here, trying to hold a 200-day, trying to hold this $3,400 level. Kind of important. But it I think it was earlier this year, Ian, where we talked about there was some negative breath going into like February. And we were wondering if there was going to be some type of flush. There might have even been into March, some type of flush to reset everything. And so my weight of evidence approach does start to go towards, we've had so much weakening breath underneath the surface. You haven't had necessarily major breakdowns in relationships of things like discretionary versus staples or high beta versus low vol. You're still seeing some strength out of financials. That was this a flush of the big tech down? Because again, I go back to, it wasn't like bullish percent was in the 80s or 90s or even high 70s before this started.
That's true.
Now, markets can do what they want. And I guess that would start below 6,550 and 6,400 if we saw those. But things you'd be looking for confirmation is stabilization of semiconductors here, ongoing outperformance of discretionary versus staples, claiming the levels that we just talked about, and maybe even some strength out of emerging markets in China. We'll see.
It's a rough week for high beta, low vol. It was looking really good. But yeah, rough candle. Now, of course, you could say, well, Ian, we did that a month ago.
Mm-hmm.
And it's still a very strong trend. You said discretionary versus staples. Yeah, I think as long as that breakout stays in that relationship, I think we're fine. And there are definitely cracks. I know we mentioned the Microsoft weirds me out. But then, those two, them and Apple kind of do this song and dance where one sucks and then one's good. And then the next 6 months is vice versa, which is fine. That's fine.
Sure. And this is all happening during the longest government shutdown ever.
Yeah.
Congratulations, everybody.
We made it.
Well, before we sign off, I should highlight the supporter of this podcast, the Adaptive Select ETF listed on the New York Stock Exchange under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks. The market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com and 1-833-880-5200. Investing involves risk, including possible loss of principal. Distributed by Quasar Distributors, LLC. Anything else you want to cover, Ian, before we wrap this one up?
I don't. Yeah, certainly one of those periods where the broad market is hanging in there, but under the surface, the average stock, pretty tough. And I would say for all of the, orange or red flags that we've thrown out over the last month and a half, I do feel like this is the first week where price is kind of, as a trend follow, it is starting to show up in the big indices. Mm-hmm. So we'll see.
We will. We can only operate with the data we have. We're below 6750. We'd like to see that reclaimed. Got to see what we do at 6550 and maybe even 6400. Russell 2000's got to get back above 2400. We'd like to see semiconductors stabilize here. And if we want to rotate into financials and things like that, that's fine. No big deal. But Veterans Day is next week, Ian, and just want to take a moment and thank all those who have served our country, including our current servicemen and women who sacrifice and their families who sacrifice to keep us free and So much love and appreciation for them, those who have served and those who are serving. Thank you so much.
Thank you very much for your service. I would echo that, past and present, and have a great week.